We are live. Welcome back. Many of you have seen we're going to start off the day with a little bit of a win and a little bit of a celebration. We got Rocket Lab closing over $5 today. We gave that to you before the move happened. Below $4, absolutely exploding, having a great move, catching the bid. Huge news, huge news. So let me ask you this. Do you think a lot of this movement we're seeing right now is in response to the news that came out most recently?
I don't think so, just because it caught a bit before that happened. Like, it's been catching a bit since the past month. And if you look at the chart, it's been
talking about it. People are just finally.
It's true. That could be it. We could have been the catalyst. No, I mean, it's been basing for years. It's a name that doesn't belong under $5, but it's a perfect example of disconnect from business execution and stock price. So there's nothing you can do once it's basing, but clearly we called out last week, it's breaking out. And we saw insane volume today, 3x the average volume on a day where small caps were getting beat. Jumio is down 10%. AST Space Mobile, another space name, beaten down. Like, all the small cap names got beaten out today, but not Rocket Lab. That's showing relative strength on volume. This wants to go higher. It could be a combination of that big time Electron deal that we had earlier this week, which was a $70 million deal across 2 years. I don't think that's it, because, like I said earlier this week, they had a $500 million government deal that they got earlier this year, and that barely made the stock nudge. Like, it went up 10%, but gave it all back within weeks. So I do think this is a combination of a clear breakout combined with business fundamentals and executions finally aligning with the price action. And it's a short squeeze candidate. So I do want to caution this breakout. I do think it's absolutely validated, but there could be some short-term traders coming into it, knowing that's 20% of the float is shorted, which I completely disagree on. Why there's more shitcodes out there that you should short, not Rocket Lab. But either way, I do think those combinations of things are resulting in clear relative strength of this name. But again, like that kind of volume we've seen all month, that isn't just shorts, that investors trying to get a short squeeze out this name. Like, that's not the case at all. I do think it's absolutely validated. But if we get these like bonker, like 10 to 15% intraday moves, I do want to caution that's probably some kind of short squeeze happening. However, I do think long-term, like, we are long-term investors. The point of this channel is for those long-term investments. There's things cannot be going better than what Rocket Lab is showing right now. Like, it's doing great.
Agreed. I mean, just today alone, I mean, really, it's the last couple days. Like, A, look at that volume, and B, just looking at that strength holding up. Even on the down days where we sold off, it's just looking like it's ready to run. And you can see in the past, we've had that gap up above where we're at now. We went to $6. We had it right here. We went to $8.05. Personally, I think $6 to $7 is going to be our next target. We're going to follow the fibs here, trade the 772. All the price levels are indicated with a final return to 1454 if we get the full retracement, leading to a 275% move from when we alerted this, when we got into this play, when we took this trade. So again, you guys are already sitting on, I don't know, I can't do the math right now. It's $3.60 to $5. I mean, $1.40 per share return, which is significant. I would say nearly 50%, right? So 35 to 40%. So, 40% return on one pick, one stock. Take a second with that. Average estimated returns on mutual and index funds and a balanced portfolio is, like, I think it's closer to 6% after fees. They say 7 to 8, but you always consider that point that they're giving right back to the advisor. Sometimes it's 2 plus the fees. Dude, you can't beat this. You just can't.
No, I fully agree with you. And again, like, when we initially called this out like less than a month ago, Palantir is a perfect example from 2 years ago of what kind of price action we could see in a Rocket Lab. Nearly identical charts. People doubted Palantir's business model 2 years ago. If they actually had a moat, can they actually hit commercial scale? Those same kind of arguments happen for Rocket Lab. Like, can they actually become a viable number 2 in the space economy beyond SpaceX? Like, or are they just a satellite launching company or a launching company, and they really won't be that full-on space prime company that we're I've been calling out, like, and same Austin agrees, like they are turning into that end-to-end space prime. I do think once the price clearly is breaking out, people will start seeing that and agreeing, because sentiment does follow price. Like people love Palantir, under $20, but nobody wanted to touch it under 10. That's a perfect example of just that's how it goes. So if you look at the Palantir chart from 2 years ago, I was looking at it right now actually. Once it broke out of $10, which again for this one psychological, it's $5. Clearly, it broke out at 10, and then start basing the 14s and 15s. I could see a similar action basing in the 8s until the next like maybe couple quarters. Clearly, we're seeing the business momentum picking up. Government deals are coming through even more, and they're getting a lot more consolidation in the space economy where they're acquiring assets at a fire sale. I could see them again picking up steam like Palantir, that AIP program. That's the next leg up. Rocket Lab, next leg up could be something like that in a year, and that's going to turn to basing in 12 and 14. Like you don't want a straight shot in Rocket Lab of just going from 4 to 12 and that's it. No, you want a gap up, consolidation, some digestion, proof of concept again, and gap up, just like Palantir did. So again, that brings me to the next point. Jumia, like Jumia shot up so quickly. I don't want to see it going from $3 to $12 and that quick of time. Like you don't want to see that. You want to see a spike, a gap up, some consolidation, some resistance and support. And then again, business proves it deserves that gap up price action. And then we fly. So right now we can get into Jumia since we have the chart up. Yep. I did add yesterday. Why did I add? Oh, sorry. Go on.
What'd you add at?
I'm pulling up right here. So on the, was it on the weekly charts? No, it was on the daily. So on the daily, I added at the 21-day EMA. So 775 is where I added. I was like, all right, I added 100 shares. My next ad is going to be, because the reason I added at 770, if you look at the 21 EMA, like we had a big
gap range. Yeah, you got a range there.
Yeah, you got, it looks like June 18th, big gap down, defended 21 EMA. Following day, very thin volume, but again, stayed above. I was like, all right, maybe this is the entry. I was wrong. Not a big deal. We're looking for 5+ years, and I only added 100 shares. Where's my next ad? I am going to be adding at. That's the tricky thing. Like it's flown so quickly. The technicals are way up.
$6.50 or $6. I'll take it all day because, like, look, you guys, when we have these growth stocks. Like I said, from day one, if you've been following the stream, the strategy from a technical standpoint is made so easy that a 5th grader can do it. That's the point, is that I had to make it so simple for myself that I couldn't possibly fuck it up. Let's be honest. Like we can overdo the TA, we can overdo the fibs and the trend lines, and we could go crazy. And I think most traders, have 7 indicators open on the chart, right? Like if you're looking at RSI and MACD, you're getting the same data. And also it's important to note that data is old. It is of the past. It is not foreshadowing the future. It is never in any sense going to tell you what will happen. Price action, I would argue, is the only thing that you can be speculative with. However, it also is not telling you what it will happen. It's only telling you what has happened. So as he always says, you let the fundamental story sell you on the idea and then use the technicals to determine and decide what's the appropriate time for me to start buying this. You don't want to just throw it in it. There's no point. You don't need to do that. There are time-based investors that I don't care. I'll just buy it because I'm buying it. Automatic buy. I think that's dumb. I think that you can be a little more calculated. And so like when we look at this chart, 430 was the bottom of this range. Again, we bought below this. The top of the range is far above that. And I would call that $9.56. Boom, we hit it already. So now we're coming back down. The question is, do we test that bottom of the range again like we did here? We ran up to $10 plus. We came down, we tested. We ran to $10. We came down, we tested. The question is, will it break this range or not? Now, if we're going to DCA in and we're going to assume that we're not going to see that $4 again, which personally, I don't foresee that happening. But I do think it's realistic to see $6, 609, 610. So I would say, look at these ranges. Look where it tried to consolidate. So the buyers tried to keep it above $6.50. Okay. If you're going to buy 100 more shares, buy 10 there. That's what I'm going to do. I'll buy 10 there. And then if we go a little lower and we come down to $6, I buy 20 more, 30 more. And then if my expected bottom is like, say, $5.70, That's when I would throw in another 50 shares, leaving that 30% room on the just in case. Powell comes out and takes a dump on everybody's lawn, and this goes to shit. We get an inflation update or announcement, Fed's hawkish, like whatever can happen, can happen. Oil crisis, it doesn't matter. You can't predict that. Always have a nice tranche of money ready to go, because guess what? If it stays there and then it rips, you had 70 shares instead of 100, but you didn't take as much risk. Who cares? You're prepared. And I think that's an important element. But I would say definitely I like that, like 640, 650, because you can see back here, we've really tried to consolidate above $6. And I think what we didn't have back then and through here is the volume that we have now. You can see that when this starts trading around $5, $6, all of a sudden people become a lot more interested. Exactly what we're seeing again here. And after this kind of bottom scoop setup, which 215 was no brainer, double bottom, like I want to shoot myself for not buying it there. But it's clearly an area that the buyers are trying to withhold. They're trying to withstand the pressure downside. So I'd say that's where I'd get in personally. That's just me.
No, you're right. I mean, again, Jumia we have a major listen, whatever Austin and I say, it's purely based on a thesis or a gut, like not gut feeling, but like it's not based on facts. We're reading between the lines of what management's talking about, what the fundamentals are showing, because there's no institutional coverage on this name. That will change. 2 weeks ago, they did a roadshow in New York to, again, like it's what IPOs do all the time. Like they do a roadshow on the street and try to get some institutional love and get some analyst coverage. Jumia has been around a long time, but again, they have no analysts covering them. So essentially, it is like an IPO for them because it's a brand new company than it was a couple years ago. There's going to be coverage on this name in the coming weeks. I guarantee you there will be. I'm leaning on the side of bullish. Just maybe I'm biased or I have my Jumia goggles on, but clearly they've turned things around on organizational fronts and the fundamentals are backing that up. So I can't imagine people would be, the analysts would be on the bearish side. But again, I could see a lot of neutrals, proven mode, or side on the bullish side. If that happens and we start getting maybe 2 or 3 analysts covering the stock, I do think it has legs to recover this move a lot quicker than most people anticipate. But again, I don't think it goes in the mid-teens until maybe 2 more quarters, because I do think we need some proof that solvency risk is near a 0. I think it's in low single digits now. But again, like we want to see that voiceover from managers saying we don't need to dilute. We have all cash on hand. We're going to hit break even at this point. They haven't said that. They've kind of massaged around it where I filled in the gaps for them. Like they're kind of saying that within next year, we're going to hit that break even point. We don't need to dilute, but they haven't vocally said it. And I think once that happens, it justifies going in the mid-teens. But again, a lot of catalysts going into his name. But again, if that's not the case, it goes lower. We have our entry points, and I'm going to add at 650, and then I'm also going to add below $6. Like I want to nibble. I'm not going to go hard all at once because this is still a very speculative play. There's a lot of risk in this name, but high risk, high reward. And we clearly saw it's up over 100% already still for the year.
I think that's worth like really taking into account is like, guys, remember that like there will always be another one. Do not think this is the last one. We've been doing this collectively for, a decade. Like this is one of, not the one. Like, I think that's really important to make that distinction because like the Palantir trade, the Robinhood trade, both ran 300-400%. Like, I was like, oh my God, you missed these. And I think they were great opportunities, right? But like, there's your proof. Now listen and do the research on your own. Follow this stuff if you want. I mean, we've been both of us independently have been doing this for years, and then together for the last 6 months or so. So like collective track record it's there. I don't want to even tell you what it is. Go look at it for yourself. Trust it for yourself. Investigate for yourself. Always take into account, as he's saying, the risk management involved in this kind of stuff. I mean, it's not like we've mortgaged our house to go buy, right? But we have this money that's set aside, that's intended for growth, and we put it in the best names that we can find that have it's arbitrage. We want to find low value, like low valuation, but high value. We want to be in when they're at the low valuation part so that when they meet their appropriate valuation, okay, now we make a decision. Do we scale out? Do we hold? But the point is like we're up over 100% on this. Keep that in mind. My cost, like, so again, little boy position because of my dummy brother. I'm getting hold.
Well, it looks like you might have another chance to get in. I know
and now
it's about $4, but
so Stocks Buddy feels like 690 is that support. Like that's the one thing I love with this indicator. Automatically calculates support for you based on the time interval you have, and it's calculating right now pretty much $7 as functional pivot. So below 7, we come lower, or below, to be exact, below like 694, we come lower. Above that, we stay bullish on the weekly. Let's see what it says for the monthly. Still bullish on the monthly with long-term support on the monthly at $3.90.
I mean,
so, and this thing routinely, like the last time this ran, Stocks Buddy predicted Jumia running at $5. It went to 68 before it gave the bear signal. So
I mean, you brought up a great point though. Like, it's all about position sizing and when you got into the position. I'm a big time Jumia bull, but what's how big of a position I have? It's less than 3%. I think it's like 2.5. I'm a big bull in Rock Collab. What position size do I have in that 2%? I like to keep these highly speculative small cap names like those 10Xers at low single digits. Because guess what? If I'm right, that 2% position will turn to a double-digit position in my portfolio. I'm going to get that alpha. But if I'm wrong and I lose 50%, guess what? I lost 1% of my portfolio.
exactly.
I would easily sleep at night. So it's all about that kind of mentality. Don't go 20% into these like speculative names that are worth under $2 billion because it's going to be tough out here. It's really tough to in this kind of dry capital market and this kind of macro driven like weakness.
Yeah, no one wants to spend. Everybody's scared.
Exactly. So like just be cautious of that. But
yeah,
we're finding winners under $5 billion. They're clearly being winners. Just like, no, it's gonna be volatile. Like that's just part of the game as a small cap investor. Like it can go up 150%, then go down 40% for just based on thin air, like no reason.
Yeah.
That's just the game. That's the name of the game. But we can go off. I did enter a Robinhood trade. I doubled my Robinhood trade yesterday.
I like that because we still got some upside. So my target longevity is 33. Cost base is 8 and then 12 on my other account, but I'm in this till at least 33. Like until we fill this out. I mean, it's going to happen. They've proven out the model. They're getting more cash than ever. They're now offering actually attractive rates, right? They've decreased their margin rate by 50%. That's significant. They've also increased their interest payout rate to a competitive rate of, I think it's like 4.75 or 5. So like we talked about the other day, where SoFi failed to execute, Robinhood has been, they've got a sniper rifle. Like, I got to give it to that guy. Like, he really fungled the ball with the whole GameStop thing. And, like, I get it. Can't let the whole market shit. Like, I get it. But I really thought, like, there was a chance that, you know, he gets pushed out politically. Like, I could see it, right? He looked like a scapegoat. So I'm impressed what management's been able to do given their circumstances. And, I mean, I think a lot of it's – they talked a little bit about the crypto deposits. But I think that they're scared because of the lack of regulation around it. But I think if we were to get some concise language around that, I think they would publish some numbers that would be shocking. And I think people would take them a lot more seriously as a bank, which
that's the thing. Like they're legitimizing their clientele. They're not the Gen Zers or the alphas. Like they're bringing in millennials. And some boomers just because of that 1% unlimited match that they have. Like if you're a boomer and you have 250K just like sitting in Fidelity and you're in some long-term investments, like if you do that transfer to Robinhood, that's $2,500 right there. And if you know the boomers, like they love any kind of pocket change.
They love a good discount or a coupon of sorts. Like they love it. They love it. I went, like I was telling you, I went golfing with a client earlier and like I had to buy a different shirt as whatever. They gave me a $15 coupon for the next round. Who do you think I'm going to give that to?
Papa.
My dad. Yeah. He loved, dude. They don't, and the crazy thing is with boomers, I feel like they don't even really care. Like that prices just go up and then the discount actually just makes it regular. It's just that feeling like I mean, there used to be discounts. I feel like that used to exist, but it's just, there's something about getting a nice discount. Let me take that off your bill for you, sir. Thank you.
Yeah,
They spend $200 more.
It's guy math. Yeah, it's absolutely guy math. Like you just your dad thinks he's saving money even though he has to go spend money to get that savings. Guy math. Somehow he's saving money or making money by doing that. But for Robin specifically, like, the reason I got on the trade, clearly we have a floor right there. But on the 21 EMA, we had a perfect bounce on the daily chart. I love the 21 EMA because for the cyclical trade, Robinhood is a cyclical trade. What do I mean by that? They had a clear inflection 6 months ago. A bunch of assets coming under custody, which is another word of saying a lot of people are transferring their money into Robinhood's accounts, and they're probably going to stay there because if you guys know, changing brokerages is such a headache. I know a lot of people who, if they didn't have an incentive to switch, they will stay. Doesn't matter how much they hate the platform. It's just such a pain to take your money out of brokerage.
You have no idea how many times I've thought about or was going to take the money out and put it somewhere else, and I just don't. So I don't want to.
Also that 5 days of not having any positions because of that transfer rule, it gives people anxiety. Like, what if we have that runner week and you miss out on a 4 to 5% gain? And it's scary.
And the UX is unmatched. Like, it's not a powerful charting tool. Like, for those of you guys that are seasoned, you're like, oh no, forget it. But you got to think about this. If you're investing in this as a business, think about it that way, right? The friction for new customers, I mean, people with nominally zero experience, is nothing because they make it so simple. So if you're investing in this as an investor and you want that business to succeed and grow, just know that as a business, they are the number one spot for anyone who's getting into the market or getting exposure to the market. And they're now also taking customers from other brokerages because of the attractive discounts, deals, incentives, right? So if they're getting all the new customers and they're starting to take old customers from the more traditional places, do the math.
I know.
Don't get mad. Do the math. Make the money. It's that simple. We do have a question here from Juan. Do you guys follow Clove, CLOV? I know that was one that was pumping and dumping for a while. Clover Investments Corp. What the hell is this? This chart doesn't look bad on the month.
It's a healthcare. I signed an NDA, so I can't talk any healthcare. So I'm gonna have to pass that.
Let's just talk chart. So I will say this: the chart is mildly attractive. They do have volume coming in here, which is good. If we go to the weekly, they've been on a pretty strong run from 64 cents. So it looks like they're avoiding losing their listing. I don't know anything about the business, though. I mean, we could hit a quick FinViz, and I'll tell you, because again, he's in a position where that's sticky, and we can't get into that. Donano's healthcare. Oh, Health Investments Corp. So 1.85 billion in sales. That's kind of.
I'm pretty sure this is a Shamat name too. I think it's one of his Shamat SPACs. Shamat's. I'm probably butchering.
Now I remember this one. It traded as a SPAC, and now it's the company it was going to be. I don't know. Oh wow, they have. Oh, it's Medicare. That's not a. Oh, that's why I can't talk about this. I don't get too into it, but I'll just say this, and we'll move on. I love anything Medicare. You got to think it's booming, right? Like healthcare is this is how they have engineered the future so that you, as Gen X, Gen Z, millennial, get nothing. They'll ensure that those fortunes are drained by healthcare and related services, residential housing, high-end nursing homes that include golf and all this shit. They will drain that money. Be very mindful of that. And the way boomers our attitudes are, I worked so hard for this. I'm gonna get mine right now. I just don't get it why young people just, because they're in the part of their lives where a small inflection point in groceries has no material impact. Because where the younger generations are getting murdered are interest rates on automobiles, housing, and which makes then on top of that, the 150% increase in consumer goods, basically that makes that the line in the sand, right? Whereas you got to think for boomers, they have not experienced that inflation in the mortgage rates. They haven't experienced, they're even paying those. They haven't experienced that inflation in mortgage rates, housing, automobiles, anything, any high interest stuff on the more expensive side that you're going to see, they don't experience it. So keep that in mind. Again, this was a little complicated. I don't know anything about the company. I do know that it's hitting 125. That's a point of resistance. If it breaks above there, this could be a great buy from a technical perspective. But beyond that, I don't know enough about the company to talk about it. But I will say anything engaging in Medicare, as long as they're profitable, is likely to be a winner probably for the next 10 years. So keep that in mind. But that's good. I'm glad you brought that up.
So let me. Do you have any more comments? So I was gonna bring up 2 more names. But is there more comments? We can answer those first.
There's a few. Latvian. It's one of our long-term members. I'm gonna pick one, and the other one I feel like is a penny stock, so we're not gonna do that one. TRGV. Don't know what that is. It's not showing up with anything.
Don't know what that is either.
GV. I remember this one. LKNCY.
Is that the coffee one?
Coffee. Dude. This one was crazy.
Don't touch anything Chinese.
Yeah, this was crazy. I remember this thing blew up. I was like, this
accounting is fraud. Yeah.
I don't even understand why anyone thought this was like crazy. He's had it since COVID. Well, I hope he didn't have it since, well, I guess it fell off during COVID, $3. So, I mean, if he's looking for targets, I'd say like you got a clear defined range above 17. So like what I would do is like, I would say, okay, I'm going to set a trailing stop loss here of like 30% because you can do that. And then I would set a fixed stop loss below $17. Breaks below $17, I'm out because it's going to 7. So basically you capture 300% profit. Congratulations. You got another question as well on snow. Do you think 110 is still on the table? If SPY and QQQ minimum pullback to 5%, talk about overall market direct. So basically what he's asking, I think, is if we see overall pullback on the major indices, do you think that will be also reflected in snow?
No, if it's a 5% pullback, I don't think so. I actually think that if the SPY and QQQ pulls back 5%, it's a rotation into the laggers.
Think money's, agreed.
I don't think, or laggers, or maybe it's today's a perfect example of the price action. Like it's OPEX. There's a lot of options were getting expired today. I won't get into it too much right now, but like volatile day because of that. And you saw QQQ and SPY red, but guess who caught a bid? IWM and MongoDB, Snowflake, Atlassian, all these software names, best of breed.
That's one we got to talk about is Mongo.
Yeah, I mean, I
look
love
at this. You see what I'm circling here, Nikhil? Look at what I'm circling on a red day. Well, so technically not a red day in SPY, but it was a red day. Like that's bullshit. It is not a good day. There's not strength in the S&P today. There was strength here.
Oh man, I caught a bit towards that.
I think that's when you really start to pay attention. When you see strength in individual names that have been beaten down, whereas you see weakness in the overall markets, I'm betting on those names. Because that means money is scared and is not going with general trend. They're making a more specific focused effort saying this is a winner. And they're betting on value, right? And dude, so I wish I could play this recording right now. At the end of 2020, I was preaching tech is the new value. Value stocks are dead. Tech is the new value. It doesn't make sense, but it's the truth. And look what's happened. It's become the new value. And I told you guys, that's where my money's going. That's where my money's going. That's where my money's going. Because it is the truth. I'm not saying, hey, we foresaw everything, but I'm saying we knew at that point in time that the trend was shifting. Traditional norms as we knew them were gone because you can't go back to the like small cap cash on cash value names that the market used to be in this very sticky rotation for 25, 30 years. That was just the truth until the truth is always subject to revision. That's something I learned early on in my life. So I think that understanding that helps you really understand our reference point, that we're investing in what the market now considers the greatest value on par dollar, which is tech. Why? Because it has explosive and expansive growth potential.
So I want to show this chart for Snowflake. I still think 110 is if things get worse. Again, let's just say the Qs shit, which I don't think it will happen in July, maybe August, September. But by then, I really do think Snowflake's price action will kind of stabilize and go up. There's clear support in this range. Look at it over here. October 2022, kind of bounced over here, consolidated, retested in January 2023, bounced. It's like a huge base in the low 20s, mid 20s, at 120s that bounce every time. We're seeing it again today. It's going to be the same action. I don't really think the stock will really move too much until their next earnings cycle, but maybe it catches a bid on any kind of. Actually, I really don't think it will move that much until the next earnings cycle. It's in proven mode right now, but it is on the lower side of the RSI. There was good volume this week. Finally, a green candle after 4 straight weeks. It was red. That's nice to see. But I can see similar price action. It holds the mid 120s. It goes up to maybe 160, 170. And that's a massive volume shelf over here. Not 160, 170. It goes to the volume shelf of 160 right here. I could see it maybe having a dead cat bounce, but really we need to clear 165 in order for me to get, okay, bottom. We're about to get a new leg in the route on the chart. So I think it's good. Let's take the victory, at least that it didn't go lower. It's defending the prior 2022 and 2023 lows. I'd love to see that. But I think the issue with Snowflake is people don't believe that they're going to actually be one of the winners in AI. Spoiler alert, they will be. But they have to prove it. So the way to prove it is the earnings reports, and that's not going to happen for another 2 months. But that's what I'm saying. I think the price action is going to stabilize here. Maybe we see going up to the 155, 160, rejecting a little. I just don't see it breaking through the 165 like we have to in order to finally get that price recovery. But before we talk to MongoDB or the other names, I did want to call out Jumia. So the reason I added here as well, I was thinking about adding before the market. Look at this 8 EMA on the weekly charts. It was perfectly aligned. Once we bottom out, broke out, perfectly aligning along this specific trend. Again, I'm just use this as a tool in order to make a decision. Don't go based fully on this, but it looks like it's holding around here. So if it was to bounce, I do think I could see a bouncing off this 8 EMA on the weekly chart. Again, if it doesn't, if it slices through, I'd add it 650. But in a world where it's just cooling off, it was way overbought, as you can see right here, it's a 73. Anything above 70, it's being overbought. And it was down 24% this week. So it's obviously going to have a pretty bad day, pretty bad weekly candle. But again, it was below average volume. I like to see that at least on a really bloody week. I do think we could see a bounce here, but either way, just wanted to call that out. What was the other name? Oh, MongoDB. So MongoDB is, actually, before we go to MongoDB, should I go over my next Jumia, or do you want me to go over my next trade?
Let's just talk MongoDB real quick, because
Okay.
I've been getting a lot of questions about it, and I'm also curious to hear your thoughts on what we've seen in the last couple days. I mean, it's been rough. I mean, what do you see? I mean, this one inside now. That's why I'm defaulting to you. What do you think why are we seeing this pullback?
Oh, this pullback. I mean, I've been very open about MongoDB since before the year. I'm bullish on the company in the next 5 years, but it was by far the most expensive growth stock I own by 20 to 25%. What I mean by that is Snowflake was the second most expensive, or Cloudflare is actually the second most expensive, but MongoDB was 20% more expensive than Cloudflare. It was just the way their business model works. It's a database company and a NoSQL. I won't get too technical, but essentially the future of databases has to kind of side on the unstructured side due to AI, and it would be a lot more easier to have all these different. I won't get into that part, but it's a database play on a consumption model for data. Data is about to explode. That's why MongoDB I'm really bullish on, and they're really good for the SMBs because they are just like the way it's like a freemium model where like their Atlas product, which is the database, the cloud product, they don't care about like the bunch of cash up front. Like they kind of give it out for free almost. But once you go into MongoDB, like you don't leave. But the issue for MongoDB is attracting those newer clients. Like if all these new clients or bigger clients are trying to get into AI and like they want to like expand their data capacity, they don't really go to MongoDB right now. They go to Oracle, for example. MongoDB's bread and butter is actually SMBs. And I've been being a dead horse with this. SMBs are struggling. They take a lot longer to recover from a tech recession that we saw a year ago. But I do think we're going to see that recovery. And I have a thesis on SMBs that I feel like I'm in the minority in, but I don't know. I think that's a good thing. That means I could see a lot more upside where SMBs are going to drastically change the next 2 years. What do I mean by that? I think AI is going to democratize a lot of SMBs because I can be an SMB now. Austin can be an SMB now. One person could be a full-on SMB because we have AI to create the coding that we need to create the software. We don't need engineers. We don't need infrastructure, someone who's setting up the database for us. Like perfect example is Piper on Silicon Valley. That whole team, or once it gets that Series A funding, the startup, like that's a SMB. I don't think that's the future anymore. I think it's going to be individuals. And because of that, I think we're going to have an explosion of SMBs in the next couple years. And because that's exactly why I'm investing in DigitalOcean. They're the cloud computing angle for SMBs. That's why I love MongoDB. They have 1,000 plus startups right now. And I think their future databases are going to go through MongoDB. Snowflake has a ton of startups in their business and SMBs. That's an SMB play as well. So that's why these software names are kind of struggling right now because SMBs are struggling a ton. And It's a consumption-based model where the clients use as they go. And if SMBs are struggling, they're really not spending. So that's why MongoDB clearly is getting that affected from the SMB play weakness. And also from the bigger clients, I've been saying a lot of the general IT budget is going towards the infrastructures like the Azures, AWSs, the computes, the servers, the cloud. Like that's where most of the budget is going. And it used to go to Gen AI applications or software applications like MongoDB. They're not going through that right now. But usually that kind of transition or that AI related investments on the infrastructure side, that takes around 6 months. It's been 6 months. So I do think that's why a lot of these software names or management have been calling for a second half pickup because that AI related investment lag, I think it's behind us now. We'll see, but I do think it's behind us. And that's why MongoDB is experiencing the majority of that pain already. Like it went from a clear rejection right here, 500, but it's almost, look how close it is. Oh my God. I didn't even know. I forgot I drew this, but I've been pounding 180 is my load the boats on the fundamentals for MongoDB, and it aligns perfectly right here. So if we see like a 5% correction in the market, I'm loading the boat on this MongoDB name, the 180. And this is a company that is worth like 15 billion, maybe even 12 billion right now, but their ceiling is massive. If the NoSQL unstructured database trend continues like it's been the past couple of years, this is going to be a monster of a company. And the fundamentals really didn't link up because they're giving away their freemium database, sacrificing upfront cash. That's why the free cash flow margin isn't great right now. But knowing that once the customers use their database, they're staying, they're not leaving, and they can catch up with the margin expansion down the line. Right now, it's all about capturing that market share. So MongoDB, if you want to know, it's clearly where's their look? Yeah, it is far below their 200 days. So it's in stage 4 right now, breakdown. I would love some stabilization around this range because it's a clear volume shelf. That's exactly why we're kind of seeing that pickup right here. Actually above average volume. Love to see that. Oh my God. falling knife, but back-to-back green candles on the weekly chart with above average volume on a volume shelf. I actually might do a trade on this because it's thin volume over here as well. Like I could see it maybe retracing towards the 300, but that's an interesting trade. So I think it's a high floor in this 180 range, but there's clear relative strength back-to-back weeks. Even this week, like yesterday, MongoDB ended green. Today it was up 3%. It's getting accumulation. It's getting bought up, and I could see a nice trade happening here. I'm actually going to add early next week if we hold over here. This is why I love these sessions. Like I love MongoDB, but I don't
gives you time, dude, because we're just in it all the time. This is honestly where I get the time to actually look at these charts. You guys bring them up, which is super helpful, and we get to talk about them, look at them, kind of work it out. And that was kind of the whole point. Is like I want you to see the process. Like, what does it look like? Well, how do we think? Because just giving it to you, like the old adage, right? It's generic, but whatever. Teach a man a fish eats for the day, or sorry, give a man a fish eats for the day. Teach a man a fish eats for a lifetime. That's the point. We're trying to show you how we fish. We're trying to teach you the technique, the understanding, the way, the thought, the critical thought process that goes into this stuff. And it may feel over your head now, but you look at how we raise children, right? I was just talking to my wife about that 1,000,000-word gap. If I read my kids, like I think it's like a book a day for the first couple years of their life, they have heard 1,000,000 more words than basically 90% of the population, because most parents don't do that because they're fucking lazy. But like I talk to my kids and I make a concentrated effort to use a variety of language, right? Like I was teaching my 3-year-old daughter yesterday what the word emerge meant. She was like drawing these little pictures of the sun and the clouds. I was like, so the sun is emerging from the clouds. She goes, I don't know about emerge. I said, that means to like separate from, to come out of. She goes, oh yeah, it's emerging, right? She can't say it, right? But that's the point, is like, it's exposure. Expose yourself to this thought process, to this critical thinking. Just let it simmer. Let it cook, baby. Just let it cook. And it'll click. It will click, little parts. And it'll happen over time. And it won't happen right now. And you're like, I don't know what the hell they're talking about. But I promise you this. You put me on this stream 2-3 years ago, I don't know what the hell we're talking about.
No, I mean, I love that. You're absolutely right. And so the way these gap downs work, to add on top of like the educational part, gaps usually get filled. So if we get a bounce, like clearly I think we're getting a floor right here with the volume shelf as well. Like I do think we're consolidating here. But if it catches a bid, another week of relative strength and it's getting accumulated, we have a 57% move potentially on the upside if it fills that gap. So this could be a big time winner. I wish Snowflake was catching a bid like this, but Snowflake's triple the size of MongoDB. So it's a different flow, different size company.
And just to show them the chart because that it minimized. I couldn't agree more. I love that. So right there, you were just highlighting it, that long-term trend, baby. That's what my mouth would water should we get that. And I think that an opportunity like that would be so ripe, dude. So ripe to just get that long-term consolidated support. I will say this too. There is an isolative range from trend low back March 20. If you draw through the top of those candles, like basically where like large scale demand comes in, I would say that the shelf looks good where it's at. I think if we get 180s, we're lucky, but I think this very well could be the point of no return for this one, at least.
No, I'm adding. I have 90 shares of this. I think it's a 7% position. I want this as a double-digit position. Like this is part of my bonsai segment of our portfolio. By bonsai, I mean like this. I own 20 plus names. Top 5 of those names is 50% of my portfolio. So like, yes, I own a ton of names, like the Block Labs, the Jumias, but like these 5 names are that's gonna be my alpha. Like I'm gonna ride and die with those 5 names. MongoDB is one of them. So yeah, I'm gonna add early next week. I drained my DCA today, adding the DigitalOcean.
Let's talk that one because we've all been following it. I put out that options trade on it. I have been buying that position down because it is down. We have a pretty fixed support. Like I think $31 holds. That's That's my supposition, at least. The $31 holds. I think that's where we're going to get it. There's we've bought up $31 a few times now. So if that doesn't happen, I'll be surprised.
No, I mean, I added because it bounced off their 200 day right here. Look how perfectly it aligns on the 200 day. Even over here, once it gapped up, consolidated, it bounced on the 200 day. Same thing, consolidated. Guess where we're at? Right there again. History doesn't repeat, but it rhymes. So I added, and it's going to. I would like it 31, but I really don't think you see that opportunity because infrastructure right now or cloud computing is on fire due to those AI related investments. Like it's roaring, and I think again they hired. This week, I got even more bullish on DigitalOcean because they hired that SVP from AWS who's in charge of the AI machine learning. And before he was at AWS, he was on the software side as a senior VP at NVIDIA. It doesn't get better than that on an AI town. And he chose to be a CTO of a $4 billion company that's competing against AWS, who's if it was public, it'd be a $1 trillion company. It would be a $1 trillion company if AWS was a separated company. Let's just be honest about that. So that just shows, holy shit, DigitalOcean has a future in this space. Like you don't leave a monster, a Goliath like AWS.
Right. Unless the opportunity for growth is greater over here. Exactly. Everybody's looking in tech especially. They're train hoppers. They just want the next best boat.
Exactly. So
this is a nicer car. And then they just go. It's like, so when you see executives leaving, when you see like basically like when you see their long-term personnel, specifically on the development side, jump at ship, it's either there's a bug and or problem that management won't listen to them about, which they foresee as a significant issue for the future. Very worrisome. Or there's no meat left on the bone. I don't have any more upside here. And for the instance of stock options and other pay packages like that, if you think that this company, like you get an inside look under the hood and you're like, shit, this is a $70 company, $70 share company, right? Our market cap should be double this. I know that alongside standard pay, that's your 10x return because most times they're getting stock options, right? So they're seeing leveraged returns on that stuff. I think that's important when you get in all that. So we have a quick correction. So Latvian was talking about TRGP, if you want to pull it up. It's Target Resources. It's been on an absolute
what is this?
Tear.
TRGP.
Tear.
It is, let's see, energy play, oil and gas.
Yeah, oil and gas. But unbelievable.
Yeah, I mean, if I look at the charts, it's on an absolute tear. You're right. Let's see a good candle. That's a little too high up. I'm trying to find a good.
Yeah, but like this is for me, this is like a scale out and thank the Lord. Like this was a great trade.
Yeah, I can't talk commodities.
Because they're trading at a 50% premium to their valuation. No, but I'm just saying, like they're trading just looking at just simplicity standard. They're trading at 50% premium to their best price targets.
Yeah, that's
so to me, it's like
I mean, yeah. Look at this relative strength; it's way overbought. So I think
so.
I could see a pullback into this 115. Yeah,
his cost basis is around 10. I mean, if this is a long-term trade, I don't know if they pay dividends. I don't know what's the deal, but you're approaching the double top here, 140. If you zoom out a little bit, you can see they had a huge, massive run 2015. Before we saw the, basically like when prices for gas, like I remember that still.
Oh,
I was
wow.
Like 20.
You're right.
Gas was $5-6 a gallon. Where I lived in Chicago, it was like $7-8. It was like everyone was like the world is ending. It was insane. Which I'm assuming that was the run. But as you can see here, cyclical because it's commodities. So Look what happened before. I would stand to assume we will see that again. Maybe not to the lows we saw. But if your cost base is $10 and you use 10 extra money, I'd take that. Yeah, I'd take half at the very least. Take half, so cover calls against the rest. Long-term expirations, you get maximum premium, and just let it ride, dude. Let it ride. So we got a couple more minutes. Are there any names that you want to absolutely cover?
There's two names. I want to talk about my next Jumia, but before I talk to fundamentals, I want to talk my next trade, Mobileye. I got into Mobileye today, actually yesterday. This is a company that's really involved in the EV industry. They do a lot of autonomy driving. I won't get into too much on the fundamentals, but they're playing the autonomy. So the future of EV, highly shorted company. It's got 25% short squeeze. I think it is clearly holding from this like trend line over here from this. It's been tanking a lot since EV industry is like struggling a ton. Clearly, to explain more than that, but I found a bottom over here, and I'm going to use that trend line from this. It went from 24 to 33 real quick. Dead cat bounce, essentially what I call it, because it gapped down so much. And then it held over here. It held over here again. Went from 25 to 33 real quick, like within a month. Like that's what this name moves that way because it's a highly shorted name. Guess where it hit this week? Same trend line. I think again, it's going to find another bottom and
20% short.
It's going to squeeze, and I think July
got a 100 million share float.
That's what I'm saying. It's an interesting trade.
This is definitely a squeeze candidate.
Yeah, I agree.
$21 billion market cap.
It's because Intel owns majority of the floats because they acquired them. They used to be a public company like 10 years ago. Got acquired by Intel, went private, but Intel again. I'm blanking on the name, but essentially they took Mobileye away from their company and launched its own entity again, went public. So that's why it's such a low flow. It's very similar to ARM Holding. ARM Holding moves like an insane amount for a company that size because SoftBank owns 90% of the flow. Intel is the same issue. Mobileye is the same issue with Intel. So I think July is going to be a rager of a month for like retail. That's why I think crypto is going to rage. Robinhood's my play for that. I think because the big dogs are out on the Hamptons, like they're just taking a month off. And I do think there's appetite in the market right now. So like we're seeing a lot of V-shaped recoveries and a lot of action, especially on the retail side. So I do think it's going to be a very squeezable July. And I'm trying to find some names of catalyst trades. Like Mobileye is a squeeze candidate. I bought some August 16th calls. I think it's going to go like, again, like the casual 30%. We'll see if I'm wrong. I have a tight stop loss. I think it's like $24. I won't get into the chart because we have a couple minutes left. But yeah, I have a tight stop loss, but I think it's an interesting spec trade. I did half of 0.5% of my portfolio I did in this trade. And we'll see if I make money on it, I'm going to add to my snowflakes and MongoDBs. We'll see, but definitely want to monitor. And before I do that, I stopped sharing my screen. So I do want to talk about my next Jumia. Austin, if you want to bring up the chart, actually, I would love to see it on your point of view. It is a disgusting chart. It's Unity, ticker U. So nobody wanted to touch Jumia under $3. This similar kind of chart's disgusting. Ooh. But I saw the fundamental story. I saw the restructuring the organization was doing. I won't get too much on Jumia, but I think this is Jumia 2.0. If you guys don't know much about Unity, it's essentially it's a gaming engine market. So they have a duopoly with Unreal Engine. So my bet on Unity has always been once the metaverse scales, Unity has a duopoly in the augmented reality segment of the market, which is AR and VR. Like that is exactly that's the future. I think we all maybe jumped the gun that it was going to happen a lot sooner than later. Like that's not happening clearly with the Vision Pro and like the Meta goggles.
Yeah,
like
there's a 10-year gap before things get adopted in that way, I'd say, because there's so much to work out, especially something like this. It's not like it's not flip phone to smartphone. That's a simpler transition because it's a tangible object, right? This is like life to fake. I think this is just a weird. I think there are hangups around it. You know what I'm saying? And the amount of the processing power required to like render an appropriate reality is like it's unfathomable. NVIDIA. So
no, I agree, and I do think that eventually it's going to go towards. Yeah, it's going to take some time for the tech to catch up, but like I said, Unity has a duopoly with Unreal Engine essentially in this augmented reality market. And guess what the CAGR is on this market? It's a 50% CAGR that's going to go to $1 trillion by 2030. So like, fine, we're way too early right now. And the reason the stock is getting destroyed is because management couldn't mishandle the worst corporate governance I've ever witnessed. John, the previous CEO, just fumbled the ball completely. He angered the developers on runtime fees. The way Unity works is like, come in our platform for free, use all our tech essentially for free. But as soon as you start making revenue, we're going to have a take rate. That's a genius model because developers, it's a risk-free model. Like developers can use their tech to develop their games. And then as soon as they get some dollars in their pocket, that's when Unity starts getting money. Essentially, John was like, no, actually, we're going to charge you to use our tech as a runtime fee. And he pissed off the developers. So he got fired 6 or 8 months ago. They got a new CEO a month ago. I don't know much about him. Came from EA Sports, specifically in the mobile gaming part of the business. But I think this is a similar turnaround story as Jumia, where got new leadership. They're cleaning house. He already got rid of all the unprofitable segments of the company, the ones that were dreamed too big, but really they're losing so much money on. They're trading at 17 times free cash flow, 16 times EBITDA margins. They're negative growth this year, but like I said, they're getting rid of all the fat in the company. And once they start from fresh next year, they have a high teen CAGR for the next 4 years with 20% free cash flow margins. So like, fine, I'll get through all the rut right now, knowing next year is going to be the year one of the turnaround story in a rapidly growing industry like AR market. Like it's going to go to $1 trillion in 6 years. They have a duopoly, true pick and shovel play of gaming industry, which I think is about to explode due to all the new tech renaissance we're going to see in the next couple of years. They have a 90% market share in the mobile gaming part of the AR market. So essentially, if the AR is going to metaverse is going to catch scale and it's going to go towards mobile gaming sometime, that's Unity. That's all Unity's lunch. So like, I do think that component of like, all right, their tech is superior. The reason it's
4 quarters.
Yeah,
it's 4 quarters of consecutive beats on earnings.
Yeah, it's just nobody wants to be part of a turnaround story until they're finally got through the storm and clear skies. So another interesting thing is they have an exclusive partnership with Apple on for Unity developers to introduce like the AR and VR using their Vision Pro. Exclusive. It came out a year ago. Meta, Zuck tried to acquire Unity before IPO. Unity board rejected it. AppLovin 2 years ago tried to acquire Unity for $58 a share, and board rejected it. Clearly, that was a mistake. It's at $15. But essentially, like management execution couldn't have been worse the past couple of years. However, they spent the past 8 months essentially cleaning house, getting rid of the unprofitable segments. And their SBC right now is 33% of the revenue. And they already called out they're going to reduce that. So I know it's not wise to kind of catch a falling knife or predict a turnaround story, but I do see a lot of similarities that saw on Jumia under $3 with Unity in the mid-teens. I think the risk is a lot lower than the reward. And I actually doubled my position the past month in this range. And I'm probably going to continue adding because they have such a high floor, because all the big tech, big metaverse players will want to acquire Unity. Their tech is that incredible.
Right. And they're already priced in with an offer. That's why I think it matters, is that when the market's already dictated a price in the past, which like you just said was what, $58 a share? That's public, right? So at a certain point, there's a psychology to like knowing someone else is willing to pay this amount for them to then leverage that and try to get more than like say what they're worth now. So in that example, that's going from 15 to 50.
That's the thing.
I'll take it.
So
I do like this for a leap trade. I'm gonna be honest with you. I'm with Juan here. I think that this is one where you're really gonna, especially someone with that kind of catalyst potential. I like.
They're one news catalyst away from going to about 20, and that alone is a 30-something% move. I also forgot, like, they have some momentum. It's not just gaming. Like, Avatar Underwater, they use Unity's tech for those underwater scenes. Like, they have an amazing, like, entertain. That's why I say Unity's TAM is so ridiculous, because the future is all eyeballs. It's going to be AR, VR, 3D. The TAM is essentially in all of entertainment across the whole world is Unity's TAM. So it's wild. It's huge. And it's a $6 billion company now, or $7 billion. So, like, if they turn the ship around and they got all the bad agents out and they can start from scratch and build the trust again from the developers, I think there's a really, it's almost like a Series C funding. I'm acting a VC, and like, it's highly speculative. Like, I'm seeing maybe a turnaround or some mass potential, but it's highly risky. I'm going to bet 3% of my portfolio in this name, and that's exactly what I did.
I love it, dude. To answer that question, Sam can, yes, we do. It's posted on the YouTube channel. I believe you can also still view it. I don't know if Twitter reposts it or not, but I do believe you can replay it on there, or you could just go to the YouTube channel and look at it there. But dude, I couldn't agree more. And now I'm like, I got to look at some stuff on my own time. This is interesting. I agree with you on the risk reward, and the fact that they're as established as they already are. It's not like hopefully they break into the industry and this will make sense. It's like they already are the industry. It's just a matter of the market realizing it. Now, also some evolution in terms of like how we adopt AR and some of these other things. But I like the Hollywood integration piece. I do think that is a critical component that should not be overlooked, in that they already are a part of the entertainment and production industry. So I think that alone tells me that the sell-off is not valid.
Yeah, absolutely. And I do also love an even-keeled pitch. I'll say the bad side, half glass empty. They've had minimal churn throughout the destruction past 2 years. Like, customers aren't taking their game off Unity's platform. It doesn't matter how much of a shit show it is. They had minimal churn. That shows a moat. However, the way the churn works for Unity is once a developer develops their game on their platform, they're not going to take the game and take it somewhere else, because it's nearly impossible. It's like Snowflake. Like, you don't take your data away from a database to go somewhere else. It takes a year of like, it's such a headache. You don't do it. So we really won't see the churn in Unity for like another year or so on the new games. Like, the developers, and once they make a new game, we'll see if they want to still use Unity's tech in order to do so, or jump to the competitor Unreal Engine. So we don't know how bad it is going to be until like a year or so. But again, it's down 60-something% in 2024. It's down like 95% from all-time highs, or 90%. Like, I think all the FUD and those worries are priced in already. So that's why I'm like, all right, I think it's interesting. I don't think it's going to zero. I know it's not going to zero. It's going to get acquired, worst case scenario, and might not be $58. It might be 25 to 30, worst case. Again, that's the worst. I think there's just like so much room for upsides. I hate catching a falling knife and telling people like I'm buying, because I'm sticking my neck out. Same way I did for Jumia. Under $3, same way I did for Palantir under $10, same way I did CrowdStrike under $100. Like, these names were not popular when I started adding. Like, I love buying when I see blood in the water. Like, that's just part of my DNA, I guess. I don't know why. I just love it because I see opportunity and I just get excited. I don't like adding to AMD at 160 when it's like up a lot, or I don't like adding to Microsoft when it's like $500. Like, I don't like that. Like, I know like winners keep winning, and when stock hits an all-time high, it's probably gonna go higher. But like, I love finding those like turnaround stories and falling knives. Like, that's what excites me, because I love creating a story behind numbers. Like, that's why I do my whole career. And I love an underdog. Like, it's something exciting when you own a position, knowing that like, you're in the minority of it, and you see an angle, and you're rooting for them as an underdog, because everyone doubted them, and you were proven right.
I couldn't agree more. And I don't know how much you guys follow. Like, I always like to use the Zacks research engine as like kind of like a backstop, just to see like based on their model, how do they value it. Unity is a hold, Jumia is a buy. So that guy has been one of the best on Wall Street. I mean, there's a reason Wall Street buys his research, so take that in consideration. The guy that institutions buy the research from is telling you, I like this too. So, but take it all into account. It's been fun. We ran a little late today. We started late. Sorry about that, guys. We'll be back Monday, regular time. Friday, regular time next week. So I love y'all. Thanks for stopping by. Make sure you follow, give us a like, a little retweet. Always appreciate it. If this has been valuable to you, it'll be valuable to somebody else. So we appreciate that support. We love you. Stay blessed now.